Hello traders. Welcome to your Follow the Bots S&P 500 Daily Market Recap, sponsored by Zaner. Since 1980, Zaner has been helping futures, commodity, and forex traders trade smarter, faster, and easier.
Welcome to the Daily Market Recap, a detailed view of the market structure and the key support and resistance levels in the S&P 500 E-mini. I'm Bill Duryea with Follow the Bots. Today is July 11th, 2013. As we noted in yesterday's recap, S&P futures had auctioned back up to 1650, retesting the prior FOMC high. Yesterday's release of the FOMC minutes removed some of the uncertainty in the minds of the market participants regarding the Fed's intention to taper their quantitative easing monetary policy. We noted in yesterday's recap that the bullish response to the release of the FOMC minutes indicated that the S&P would likely auction above 1650 and potentially make a higher high. Our next known resistance level coming into today's session is up at 1670. 1670 was today's projected upside directional target. The market is just now shy of its multi-year high. In our market structure post on the website yesterday, we noted that the lack of selling pressure, indicated here by the market's reluctance to trade down even to test support at 1638, but holding support at the overnight low at 1641, and the rally up off of the low into the close, suggested the likelihood that the S&P would retest yesterday's high. The upside breakout occurred during the overnight Globex session. S&P futures traded above 1650 and initially auctioned up to 1668 in the pre-market. Our estimated pullback target for the rally was down at 1660. The market made a modest pullback to 1661 before retesting the high at 1670 and closing today's session at the high. On the Follow the Bots website, we posted the probability distribution coming into today's session, as calibrated from the 1641 low during yesterday's auction and adjusted to the breakout of the prior high at 1650. We arrived at our estimated Markov chain price level at 1664 and our extreme price excursion target located up at 1670. Using our micro order flow algorithms to detect where the buying interest and selling pressure would develop during today's rally, the order flow monitor alerted us that during the overnight session there was a lack of buying interest when price initially traded up at or near 1668. This created a short-term opportunity to go short with the expectation that price would pull back at or near the median pullback target at 1660. When the S&P finally auctioned down from the high, selling pressure paused at 1661. There was a minor downtick to 60.75, but there was little in the way of selling pressure during the pullback. The market auctioned up off of the low and traded back shy of the overnight high and went flat for the majority of the session. During the afternoon segment of today's auction, buying interest returned and the S&P auctioned back up to the overnight high, traded up to known resistance at 1670, made a modest pullback to the prior high at 1667, before auctioning back up to the high into the close. The S&P ended today's session at 1670. With the developments during today's session, it's difficult to determine exactly where support is. The market does not appear to be ready to pull back as it closed today's session at the high. Potentially, the S&P could auction up to the multi-year high prior to pulling back. Currently, our best estimate as to where support is located is back at 1650, the prior high and the transition or the breakout point from which the market auctioned to the high during today's overnight session. The minor pullback level at or near 1660 is the midpoint of the newly developing trading range. That concludes our daily recap for this Thursday. If you'd like to follow our real-time market commentary, visit us on the web at www.followthebots.com.
For more information regarding Zaner's brokerage services or the content of this broadcast, contact Neil Rogers, nrogers@zaner.com, 312-277-0135. This is Cuerva from Follow the Bots. Happy trading.